Today, our group will be presenting on the merger between Far Eastern Telecommunications and Asia Pacific Telecom. My name is Hu Yingqi. Here is the executive summary. The acquirer in this merger is Far Eastern Telecommunications. The deal was finalized at a price of 24.7 billion NT dollars. We will break down the key aspects of the merger into 5 parts: business overview, industry overview, deal rationale, financial analysis, and other analysis. First of all, let's talk about Far Eastern Telecommunications. It is one of Taiwan's top 3 telecom companies, holding about 24.6% of the mobile market share. In addition to its core telecom services, it has expanded into digital services such as Friday Wallet. Founded in 1996 as a joint venture between the Far Eastern Group and AT&T, it has grown through acquisitions, including Yuanzhi Telecom, KG Telecom, and most recently, Asia Pacific Telecom. Far Eastern has a market capitalization of 321.629 billion NT dollars, a PE ratio of 26.24, and an earnings per share of 3.42 in 2023. It achieved 7-year highs in revenue, net profit, and earnings per share. Telecom services remain the main revenue source, while digital transformation efforts also boosted its revenue. The company's primary shareholder is Yuanding Jituan, part of Far Eastern Group. Next, let's take a look at Asia Pacific Telecom. It is Taiwan's first private fixed line operator. Before its merger with Far Eastern in 2023, Asia Pacific Telecom has a market capitalization of 31.492 billion NT dollars, but faced financial challenges with several years of negative earnings per share. Its core business, telecommunications, accounted for about 70% of revenue. Asia Pacific Telecom largest shareholder was Foxconn Technology Group, followed by Far Eastern before merging.
Hi, I'm Shishan Ming. Today, I'd like to provide a brief overview of the telecommunication industry, focusing on the current challenges and potential future directions. The telecom industry has faced several challenges. As traditional telecom services has commoditized, differentiations among providers has diminished, leading to intense price competition and shrinking profit margins. While 5G technologies has opened up new opportunities, companies have already invested heavily and will need to continue investing in 5G infrastructure. At the same time, rising energy costs make it even harder for companies to achieve their goals. To address these challenges, we suggest 2 strategies. First, building ecosystem to create new revenue streams and to reduce operational risk. And second, adopting to telco approach, shifting towards a more customer-centric business model to enhance satisfaction and create differentiation. Looking at Taiwan, the market is dominated by 3 main telecom operators, with Chunghwa Telecom holding the biggest market share. Although the total number of telecom users has remained stable around 30 million, mergers in 2023 have led to some loss in users due to an account overlaps. In terms of revenue, the average growth rate is about 9%. Largely driven by increased online activities, but mergers have led to a slight revenue decline, mainly from the loss of users.
我是谢磊. Let's talk about deal rationale. It's a statutory merger, and the transfer price can be divided in 2 parts. In 2021, Far East acquired 500 million of Asia Pacific private stock in the form of FVTOCI, so it brought deduction to the retained earnings after reclassification. I will further explain this is not a bad thing in the next 2 slides. Furthermore, Far East used share swap, issuing its own stock to get a remaining 90% share of Asia Pacific, and the deal is still under the measurement period, so the goodwill may change. The major motivation behind this deal is 5G. Far East wants to expand its 5G network capability, and this is exactly what Asia Pacific can offer: the spectrum, the customer with lower budgets, and we further investigate how this 500 million stock investment work. Asia Pacific disclosed it in its annual report in 2022. They use it to build a 5G infrastructure and share it with Far East. The other benefits like IoT solution and AI can align with Far East's future strategy as well. As you can see, the most trivial synergy here is the direct boost to the revenue and the customer base in Q4 last year. But it would also bring down the average revenue per user. Secondly, Far East now has up to 800 million hertz of extreme high frequency after the merger, which is crucial for the business clients to build their internet. But government asked land to return 100 million hertz for the antitrust reason, and the other special bandwidth like can enhance the signal indoors and the rural areas. What's more, owing to the infrastructure sharing, the user of two different companies can now use the same base station without any gap, and it helped Far East to save more electricity. But the replacement of the base station can be costly.
Hi everyone, today I will provide a quick overview of financial ratio analysis, both from slide in consolidate and standalone perspectives. Okay, let's start. In the consolidated statement, you can see in the slide there's a zero ratio, and the net working capital to total asset ratio seems to drop, reflecting growing short-term repayment pressure. And on the other hand, the PEG ratio improved, showing better profitability, though it still hints the slight overvaluation. So lastly, the sustainable growth rate turned positive, which indicates the progress, but limited growth. Now for the standalone statements. The net working capital to total asset ratio worst, signaling even higher liquidity risk. And the DOL in the slides highlights the significant sensitivity of operating profit or to revenue change. And while the DFL in the slides reflects stability with minimal debate risk. In conclusion, both these slides, while consolidated results showing how improving profitability and standalone liquidity concerns about the high profit sensitivity remains key challenge to the company. And balancing growth and financial stability will be critical and essential for the company long-term success.
Hi, I'm Simon. Today I'm going to dive into the owner analysis. Firstly, we focus on the transaction price. According to this table, we can see these two deals in Taiwan are discounted takeover, and after acquired APT even had around 20% discount, while other telecom deals and TNT average all had around 10 to 40% of deal premium. The potential rationale for deal discount might be due to the financial challenge that APT faced, such as increasing debt and sustained net loss, which all indicated there will be difficulties for future operations and fundraising. And after the acquisition had been announced, FAT's stock price had no significant fluctuations, while APT's stock price dropped 16.4% directly. Secondly, the analysis is business and financial performance ratio. As for the business performance, domestic mobile users increased from 24% to 30% after acquisition, and 5G penetration rate keeps growing to 40% as the top in the telecom industry. However, average revenue per user decreased a little bit after diluted by APT. And as for the financial ratios, the revenue, EBITDA, and net income all had around remarkable 10 to 15% YOY growth. Overall, there are three main drivers for this growth, such as increasing prepaid card, new economy business, and synergies after acquisition. Thirdly, there might be other potential merger risk to be concerned, such as increasing competition level, employee placement issue, and base station consolidation. Last, let me wrap up the whole presentation. This deal was a discounted deal, and the deal rationale was to increase the 5G deployment and customer base. High DOL might reflect the huge fixed investment, and low DFO indicated a stable financial structure. Its business performance reaches recorded high, but the potential risks following after integration should be noticed. And this is the end of our presentation. Thank you.